Hi there, you're returning with us here on Lowcountry Money Talk. We're glad you stuck around because we have a big topic for the back half of this show, unpacking the stock market, what's happening, it's volatile, and thankfully we've brought in expert Phil Bloyd, who's sticking around to help us with this one. Nice to see you, of course, with Revolutionary Financial Group.
Right.
What do we do here? We're watching we've got inflation, we've got up, we've got down, we've got, a potential issue with Russia maybe invading Ukraine. That's causing more volatility and plummets one day and maybe not the next. So I guess the question is, are we in a bear market? What does all of this movement mean?
Yeah. Well, there's all kinds of technical ways to figure that out. But as far as a bear market, we're due for one anyway. So maybe this is just the catalyst to put us there. Because if we look at our chart here, I have a little chart we'll put up. But, this is a long bull run here. So this is 100 years of the market. This is a few years back, and this is what we're currently in. If we take the COVID out and extend that, we've had a heck of a bull run.
Absolutely.
You should have made a lot of money over the last 12 years, I would think.
So.
Now gets the tough stuff. So we got these little bears that come in between, okay? So I did notice, and looking at some things over the past few weeks, that if we look at the NASDAQ index, most people say that's a techie thing and all that. So if we look at that index, I think what I heard was about 50% of the stocks were already in bear territory, meaning that they were 20% off their highs.
Wow.
And in the S&P index, S&P 500 index, about 30% of the stocks there were already off 20% off their highs. So technically, maybe the index isn't bear, but many of the stocks are. And I tell people, I think those stocks are there waiting for the others to join them. Okay. So, it's been volatile, and we had a really good day. This information about Russia and back, I think that maybe Russia's just using that to move the oil prices up.
Interesting.
Because they're like a 70% energy economy.
Right.
So the higher the oil prices, the more money they make, right?
Maybe this is all just strategy for pricing. Who knows? It's hard to know. Okay, but at any case, the folks who are at home are wondering probably at this point, how do we plan for this? How do we cope with this? How are we in the right risk category?
Well, you're going to find out with your portfolio now if you're losing sleep that maybe you're not allocated in the right amount of risk versus reward, or maybe you're too aggressive. So we're going to have some time here where the market really moves back up. You'll go down, you'll move up, you'll go down. So I really would not like personally to sell anything when it's low. You don't want to buy into the fear. So what you want to do is you want to have a good strategy to say, okay, maybe I'm a little overly aggressive and I need to pull back as a percentage. And when these stocks move back up, maybe you do your pullback then, is what I would say. You don't want to solidify your loss and sell low. That's kind of goes against it. But a lot of people say, when does the next bear start? I think we're moving towards that. Now, typically, historically, we may have a nice run up before that bear kicks in. So if we have that nice run up, you want to take advantage of it.
Well, that's exactly what I'm seeing when you're talking about this 100-year history here. Is it's pretty much traditionally what has happened. So if you're just going on statistics, that's probably where we're headed. So it's good to know how to plan for that. With all of the volatility, we're not going to solve the question about the Russia-Ukraine conflict today, but we may solve if we're in the right risk categories just by talking to an expert. So it's important to know
and
that.
Adjust that as it comes up. One statistic I'll give you here: if the market goes down and my portfolio is down 40%, I'm going to have a 67% return just to break even. So if I'm averaging an 8% return, it will take me over 6 years just to break even.
Okay.
So now is the time, as we get these upswings, it's really time to get your portfolio in order
Right.
for the time coming, ahead.
And keep your head grounded too, so you don't react too quickly.
No knee-jerk stuff.
No, yes, and sometimes that's where you come in, is almost a therapist, keeping us grounded, right?
Remember, Jessa, fear and greed move the market. So we're in the fear now, the greed will come later, and people will say, I need to buy it so cheap, and then it'll move. That's how it goes.
We'll leave it right there, but we have more after the break.